such lofty heights? The response is unequivocal and intriguing. Assets are more than mere possessions. They are powerful conductors directing the symphony of wealth creation. They are the golden gooses laying the eggs of prosperity. Let's delve into a few illustrative scenarios. Picture two individuals, each with identical monthly salaries. One squanders their earnings on the most recent tech and high-end apparel, while the other wisely invests in stocks and real estate. As the calendar pages flip, the one who invested in assets would have constructed a hefty wealth portfolio, while the other, despite their tireless efforts, would possess minimal riches. The key divergence isn't in the earnings, but in how they're utilized. The world's affluent virtuosos grasp this concept. They acknowledge that assets aren't merely strongholds for safeguarding wealth, but fertile soil for cultivating additional affluence. It isn't by chance that the lion's share of the world's wealth is in the hands of the top 1%. They have perfected the art of harnessing assets for their benefit. Assets, akin to a multi-purpose toolkit, manifest in various forms: real estate, stocks, bonds, cryptocurrencies, intellectual property, and more. Each tool bears its distinctive characteristics, perks, and risks. Consider real estate, for instance. When you invest in property, you gain not just a physical asset, but also the possibility of reaping regular income through rentals. Stocks, conversely, provide a stake in a corporation and the chance to expand your wealth as the company's bottom line rises. Bonds represent loans you extend to a firm or government in exchange for periodic interest payments. Cryptocurrencies, the latest entrants in the asset league, bring with them both the excitement and the uncertainty of investing in a swiftly morphing digital economy. Intellectual property, another notable asset class, can royalties each time a patented item is sold or a copyrighted work is utilized. The secret lies in mastering these tools to spawn income and bolster wealth. Assets are not the sole privilege of the affluent and renowned. Any individual can orchestrate a wealth symphony through assets. It requires knowledge, a thoughtfully designed strategy, and a sprinkle of bravery. So, whether you're an experienced investor refining your portfolio or a novice starting to learn the ropes, assets can serve as your stepping stone to financial triumph. In today's digital epoch, there's a treasure trove of resources to enlighten you about assets. The test is in steering through this ocean of data and reeling in dependable, implementable insights. Yes, indeed, assets are your ticket to financial liberty, so let's embark on a deep-sea exploration of assets and discover the hidden riches that await. The first asset that we are going to dive deep into is none other than real estate, a darling of many who have found success in the investment sector. Now, when we say real estate, we are not limiting our conversation to buying a home to reside in. Far from it, we are exploring strategic acquisitions that can serve as a reliable source of passive income, and given the right circumstances and decisions, appreciate in value over the passage of time. Let's break it down. You could purchase a property, put it up for rent, and just like that, you have a consistent flow of income. But it's not as simple as picking any structure and turning it into an income generator. The key is in the location, the timing, and the type of real estate. You need to do a deep dive into the market, understand the prevailing trends, demand, and the potential for growth in the area before making your move. For instance, investing in residential properties such as houses or apartments in an area projected for growth, like a budding tech hub or a city with upcoming infrastructure projects, can lead to substantial returns. In contrast, a commercial property, like a retail store or office building in a bustling city centre, can promise better rental yield due to higher demand. Investment in land too can be rewarding, especially in areas with high development potential. If purchased at the right time, the value of the land can skyrocket with the arrival of new industries or residential projects. And let's not forget real estate investment trusts, or REITs, which allow investing in real estate without physically owning the property. They pool funds from several investors to invest in a portfolio of properties, offering a way to earn dividends. So remember, real estate investment goes beyond just owning a piece of property. It's about strategic decision-making, understanding the market, and leveraging opportunities to your advantage. Next on our agenda is the intriguing world of the stock market, a platform where immense fortunes are made and lost on a daily basis. To its complex nature, envision the stock market as a bustling marketplace where you have the opportunity to buy a fragment or a share of a company. When the company flourishes, you enjoy the benefits either in the form of dividends, which are a share the company's profits given to shareholders, or an increase in the value of your shares, a phenomenon known as capital appreciation. Let's delve a bit deeper. There are different types of stocks that you can invest in. Common stocks allow shareholders voting rights, but there's no guarantee of dividend payments. Preferred stocks, on the other hand, don't offer voting rights, but guarantee the payment dividends before common shareholders. Now, here's an important rule of the game. Putting all your eggs in one basket is a high-risk move, so savvy investors diversify, distributing their investments across various sectors and companies. By doing so, you're not dependent on one company's performance for your financial well-being. It's like betting on several horses in a race, rather than just one. Choosing the right stocks indeed feel like navigating a labyrinth, inundated with numbers and industry-specific jargon. But don't let that discourage you. With the right knowledge, a discerning eye for opportunity, and a solid strategy, you can turn the stock market into a veritable treasure trove. Differentiating between different types of stocks, understanding market trends, and taking calculated risks are integral to successful investing. So while the stock market might initially appear daunting, equipped with the right knowledge and strategy, it has the potential to become a goldmine of opportunities. Bonds, the steady eddies of the investment world, are a fascinating subject worth delving into. These are essentially loans that investors provide to corporations or government bodies. To simplify, imagine lending a friend $20, with the promise that they'll not only pay you back the same amount but also a little extra for your troubles. The extra is the interest, and the original amount is the principal. Bonds operate on the same principle, but on a much larger scale. There's a variety in the world of bonds too. Municipal bonds are issued by cities and towns, and they use the money to fund public projects such as building schools or improving infrastructure. Treasury bonds are issued by the government, and the money is used to fund all sorts of federal activities. Corporate bonds, on the other hand, are issued by companies, and the money is used to fund expansions or other business initiatives. Each of these bonds has different level of risk and therefore a different potential return. For instance, Treasury bonds are considered the safest because they're backed by the full faith and credit of the US government. Corporate bonds offer higher interest rates to compensate for the additional risk of a company potentially going out of business. Municipal bonds are somewhere in the middle, often offering tax benefits to compensate for their slightly higher risk compared to Treasury bonds. In the world of investments, bonds may seem like the plodding tortoise compared to the hare-like speed of hot tech stocks or rising cryptocurrencies. But remember, they bring stability and predictability to your portfolio. They provide steady income and act as a safety net, cushioning the blow if other, riskier investments fail to perform. Bonds might not make you a millionaire overnight, but they add an essential layer of security and balance to your wealth-building journey. They might not be the most adrenaline-pumping asset, but they're a vital part of a balanced portfolio. So let's delve deeper into the fascinating world of cryptocurrency, the new contender in the financial ring. A product of the digital era, this asset, fortified by the revolutionary blockchain technology, has been creating seismic shifts in the economic landscape for over a decade. You've probably heard of Bitcoin, the trailblazer that ignited this digital revolution back in 2009. Bitcoin, with its promise of decentralization and peer-to-peer transactions, opened up a whole new world of possibilities. It has given rise to an array of radically unique currencies, each with its own distinct properties and potential returns. Take Ethereum, for instance, another titan in the realm of cryptocurrency. Its introduction of smart contracts and decentralized applications, or dApps, set new standards and elevated the game. It's not just coin, it's a whole network that hosts other cryptocurrencies and even digital tokens through its ERC-20 standard. Ripple, on the other hand, focuses on speeding up international transactions, making it an attractive option for banks and remittance services. While Litecoin, often referred to as the silver to gold, offers a quicker and more efficient alternative to Bitcoin with a faster block generation rate. Then there's also Binance Coin, which started as a utility token for discounted trading fees on the Binance platform, but it has since grown into a widely recognized cryptocurrency of its own, with a myriad of use cases. The potential for high returns with these cryptocurrencies is indisputable. However, it is crucial to remember that the sphere of cryptocurrency is not without its risks. Prices fluctuate dramatically and can swing drastically in the blink of an eye. One moment you could be soaring high, and the next you might yourself nosediving. The shadow of regulatory uncertainties also looms over the landscape, adding a layer of complexity to the arena. But for those brave enough to navigate these turbulent waters, the spoils can be exceptional. Tales of individuals transforming into overnight millionaires are not uncommon. Cryptocurrency is a high-stakes game, but for those with the nerve to dive in, the rewards can be extremely lucrative. For those who enjoy the comfort of a hands-off approach, mutual funds are an excellent choice. Picture a lavish spread of investment options, each one carefully curated by a team of brilliant minds. That's the crux of mutual funds. They provide you, the investor, the golden opportunity to distribute your money across a broad spectrum of assets, ranging from blue-chip stocks to government bonds to real estate and beyond. This financial strategy is known as diversification. It's the financial equivalent of not putting all your eggs in one basket, consequently minimizing the risk of significant financial loss. In the extensive universe of mutual funds, there are two key players: active and passive funds. Let's dive a bit deeper into these. Active funds are diligently managed by professionals who make strategic decisions with the goal to outshine the market. For instance, the Fidelity Contra Fund is an example of an active fund that focuses on investing in companies whose value isn't fully recognized by the public. On the flip side, passive funds simply aspire to mirror the performance of a specific market index, like the S&P 500 or the Nasdaq 100. A perfect example of a passive fund is the Vanguard 500 Index Fund, which aims to closely track the returns of the S&P 500 index. There's also another type of mutual fund known as the balanced fund. It's a mix of equity and debt funds and aims to provide both growth and regular income. An example of this is the Vanguard Wellesley Income Fund, which aims about 60% in bonds and 40% in stocks. The allure of mutual funds lies in their simplicity and diversity. They offer an opportunity for diversification and professional management without the prerequisite for you to be a Wall Street wizard. Whether you're venturing into the world of investments for the first time or are a seasoned investor, mutual funds can be an excellent vehicle for you to grow your wealth without needing to be a finance aficionado. Stepping away from the realm of financial assets, we delve into the intriguing world of intellectual property. This extraordinary category of assets is the very embodiment of your ideas and creative endeavors, potentially carrying a value equivalent to a treasure trove. Let's delve deeper into this innovative arena. Consider patents, one form of intellectual property safeguarding your inventions and unique products. They prevent others from producing, selling, or using your invention without your consent. Take the case of Thomas Edison, who held 1,093 patents for his inventions, providing him a steady stream of income for many years. Then we have trademarks, another form of intellectual property, protecting your brand name, logo, or slogan. A shining example would be Apple Inc., whose Apple logo is universally recognized, contributing significantly to the value of the company. Let's also discuss copyrighted works, yet another form of intellectual property which protect original works of authorship. Think about J.K. Rowling, the author of the Harry Potter series, who has reaped enormous financial benefits from her copyrighted works. Trade secrets, such as Coca-Cola's secret formula, are another form of intellectual property. These secrets are not only valuable because of their uniqueness, but also because of the competitive edge they provide over rivals. And lastly, let's not forget about the artists and their original works, which represent yet another form of intellectual property. The works of artists like Picasso or Van Gogh have increased in value exponentially over time, turning into priceless assets. Yes, intellectual property might often be overlooked in favor of more traditional physical assets. However, it is a critical part of the asset landscape. It is the core of innovation and creativity, and if well managed, it can yield impressive returns indeed. After all, your ideas, your creativity, your brainchild can be just as valuable, if not more, as any tangible asset. As we approach the finale of our expedition, let's take a moment to reflect on the multifaceted universe of assets that could potentially pave your path to affluence. We have journeyed through the expansive terrain of real estate, a domain that has consistently demonstrated its value in amassing wealth, with examples of millionaires and billionaires whose fortunes have been built on this very foundation. The real estate market is a game of resilience, signifying the essence of understanding market dynamics, such as the impact of location and demand on property prices, and making tactical decisions like investing in rental properties or flipping houses for profit. Granted, it can seem like an intricate maze, but with the correct navigation, you can steer your way to success. Next, we plunged into the exhilarating world of the stock market, an arena where fortunes can be birthed or shattered within the blink of an eye. Here, companies like Apple, Amazon, and Tesla are prime examples of how judicious investments can yield enormous returns. In this sphere, knowledge is indeed your greatest ally. Accurately comprehending market fluctuations, maintaining a crystal-clear vision of your financial aspirations, and being capable of making well-informed decisions all serve as the key to unlocking your wealth potential. We then found refuge in the safe haven of bonds. While they may not induce the same adrenaline-pumping excitement as stocks, they promise a consistent flow of income and constitute a vital component of a well-rounded portfolio. Take, for instance, government and corporate bonds, which provide a predictable, albeit slower, return on your investment. They indeed embody the proverbial tortoise in the race, progressing at a steady pace, but often reaching the finish line with their heads held high. Our journey then brought us to the intriguing realm of cryptocurrencies. A fairly recent contender in the asset race, cryptocurrencies like Bitcoin and Ethereum offer potentially high returns, but come swathed in their unique set of challenges and risks. To thrive here, being technically proficient, remaining current with the latest trends, and understanding when to trade or retain your assets is vital. We have also traversed through the principle of diversification, an indispensable approach in the investment world. Diversification, or the practice of spreading your investments across different asset classes such as stocks, bonds, real estate, and cryptocurrencies, plays a critical role in risk management. It's essentially an investment strategy that can help you ride out market volatility, protect your wealth, and potentially boost your returns. It's less about pooling all your eggs in one basket and more about creating a vibrant tapestry of opportunities like a colorful Easter egg hunt. Lastly, we delved into the domain of intellectual property, an untapped reservoir of potential wealth. Think patents, trademarks, and copyrights, all of which can be monetized for significant profits. This asset class is the embodiment of creativity, innovation, and the protection of your unique ideas. Here, the potential for wealth creation is boundless. Remember, amassing wealth isn't a sprint, it's more of a marathon. With the right assets stowed away in your investment portfolio, you're already on the right track. It's not about the allure of quick riches, but rather about the creation of enduring, sustainable wealth. The journey might be demanding, but with the right roadmap, it's a voyage worth every step. Before we draw to a close, let's delve further and discuss the indispensable value of an investment strategy. You see, investing isn't akin to spinning the roulette wheel or pulling a slot machine. It's more like a calculated chess match. You need to have a clear roadmap, a specific list of objectives, and crucially, a robust strategy. To illustrate, let's think about investing as setting sail on a vast ocean. Embarking on this journey without a sound strategy is like casting off without a compass. Sure, you might strike gold and find a lush, uninhabited island, or more likely, you could end up adrift and lost. That's why comprehensive research, meticulous due diligence are critical before putting your money into any asset. Try to understand the asset's character, its historical performance, prospective potential, and the risks involved. For instance, investing in blue-chip stocks, which are shares in large, well-established companies with a history of reliable performance, is considered a safe, long-term strategy. These are akin to the steady, reliable trade winds that can carry your ship steadily towards your destination. On the other hand, high-risk investments like cryptocurrencies or venture capital can potentially yield significant returns, but also carry a high level of risk. These are akin to the unpredictable gales that could either land you on a treasure island or leave you shipwrecked. Then there are balanced strategies like diversified portfolios. These involve spreading your investments across a variety of assets to reduce risk. It's like having a crew of sailors, each with a different skill set, to navigate through calm and stormy weather alike. Having a clear investment strategy acts as your guiding star, providing direction and a safety net. It supports in making informed decisions, mitigating risks, and ultimately enhancing the probability of hitting your financial targets. A well-articulated strategy is your compass in the often choppy waters of investing. Utilize it wisely. We've traversed quite a range of topics today, and I hope you're departing with a wealth of knowledge. As we arrive at the conclusion of this eye-opening expedition, we must stress the paramount importance of applying this knowledge you've gathered. It's not enough to simply watch and forget. The real power lies in the application. Consider this: you've learned about the benefits of diversifying your investment portfolio. Now, if you apply this knowledge and distribute your investments across various sectors, you may see a significant drop in your risk and potential losses. Next, take these learnings and experiment with them. For instance, if we discussed the mechanics of a particular stock market strategy, put it into action with a small amount and observe the results. You might be surprised at the outcome. This is how we see the magic unfold, by applying, experimenting, and witnessing the fruits of our newfound knowledge. Our meeting today was indeed a productive one, and I'm confident you've gained a lot from it. However, the beauty of knowledge is that it grows when shared. It's like a ripple effect. You throw a pebble, knowledge, into a pond, your circle, and the ripples, the impact, spread outwards, touching others and creating a larger impact. Take this video, for example. If you share it with your friends, family, or anyone you think can benefit from it, you're not just increasing their financial IQ, but also encouraging them to invest wisely. This way, we can all grow together, creating a financially literate community and making this world a wealthier place, one smart investment at a time. If you've enjoyed this video and found it beneficial, do give us a thumbs up and subscribe to our channel. This helps us bring more such information-rich content your way. Remember, the road to wealth is paved with smart investments and shared knowledge. Here's to your financial success. As we wrap up this enlightening journey, let's take a moment to reflect on the essence of this discourse: the importance of investing wisely. Investing isn't a sprint, it's a marathon, a lifelong journey where patience, knowledge, and strategy are your best companions. The key to success in this journey is not just gathering information, but applying it effectively. The knowledge you've gained today is a powerful tool in your financial arsenal. Remember, a tool is only as good as the hands that wield it. So practice, experiment, learn from your mistakes, and keep refining your strategies. Investing isn't a one-time affair, it's an ongoing process where every step, every decision, and every investment contributes to your financial growth. It's a journey filled with ups and downs, triumphs and lessons, but the reward at the end is worth every step. And as we part ways today, I encourage you all to continue on this path of learning and investing. Don't stop here. Keep seeking knowledge, keep exploring opportunities, and keep growing your wealth. Remember, the road to wealth is paved with smart investments. It's a journey that requires commitment, patience, and a thirst for knowledge. So here's to your journey, here's to your financial success. As we sign off, always remember that the power of strategy and shared knowledge can make the world a wealthier place. Happy investing!